Hi, welcome to Forex In Four. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Wednesday, May 11th, 2011. This morning I'm talking about UK inflation. Now, in the UK, the inflation report just came out, was issued, and it actually was a little bit hawkish in tone. They said that they think that CPI data can get up to 5%, showing 5% inflation this year, but, they think it's going to fall back in the long term, meaning, not this year, but next year, perhaps the following year. And it's, those kind of long-term targets that keep these guys from hanging on. But at the end of the day, 5% inflation in the UK is going to be very, very high in the short and intermediate term. And there's some thoughts that the Bank of England's going to have to do something about rates, even if it's just a token raise. So you can see here we're looking at the pound 30-minute chart. All right, and it had sort of been trading this range here. All right, say about 163.90 on the top, 163.70 on the bottom, and then boom, once we got the breakout there, you can see traded higher, just up to 165, which may serve as a little bit of resistance there. Okay, you can see we've got this nice looks like a shooting star candle happening there on the 30 minutes, just ahead of 165. So, that could be a short-term reversal candle. Got stochastics oversold, so just keep an eye on that. We also have this morning, we had Chinese data come out overnight. They also had their CPI data. Came in hotter than expected, but not by much. Came in with, showing 5.3% inflation. The expectation was for 5.2% inflation, and of course this is higher than the Chinese government would like. So, they're going to have to do something about how to control the inflation there, and what they've been doing so far is they've been raising interest rates, they've been raising bank reserve requirements. You can see that that they also had new loans issued. All right, they came in more than expected, 739 billion versus 700 billion. So that's a little bit more than they were expecting, and they're trying to get the economy to slow down a little bit, but they're doing everything they can except for allowing the yuan to appreciate. So we're going to have to see what happens there. I discussed the conference that China's got with the U.S., the economic summit that they have. That could be a major topic of discussion. They might be starting to get ready to talk about it. So, hey, maybe that's a good thing. That shows progress. All right, so you can see that the Aussie, after that, Aussie was higher, okay? The MSCI Pac Rim Index was higher, and the Aussie's got a fairly high correlation to that, so you can see that it traded up, although it looks like it's giving back some of its gains right now. So, there's seems to be a little bit uncertain whether or not China's actually going to slow down too much. I think if the number came in that CPI number came in a lot hotter than expected, then people would be more afraid that they're going to have to slow down. But they might be able to live with 5.3% inflation for the month. So we'll have to see what happens there. But that's what's going on with the Aussie. Okay, the Kiwi is actually just trading a little bit lower. Looks to be a little bit range bound there. They had their housing home sales came in. They declined, but they declined less than expected. So I guess you could read into that as that's a good thing. Yesterday we talked about the IMF basically coming out and saying that the Kiwi is 20% overvalued. So that's interesting as well. We've got dollar lower versus loonie. Okay, nice little trend happening there, coming back down towards that 95-cent level. Even though oil prices are lower today. Now we have to remember that the CME raised the margin requirements for oil trading. They're trying to shake some of the speculators out of the market because their thesis is that it's speculators, it's government's thesis that it's speculators are driving the price of oil and not actually monetary policy here. So we'll see what happens. We still got oil up above 100, but we're seeing that the other commodities, gold and some of the precious metals, are also higher as well. Just want to take a quick peek. Lastly, Euro now trading firmly below 144. We still got this Greek debt crisis floating about there, so we're not sure exactly what's going to happen there. It's one of these things where one day it's on, the next day it's off, and it's really just a question of, well, what's gonna what's it going to take to get this thing settled and to get the ECB and the Eurozone countries to agree to some sort of settlement, because the further along they let it go, the worse the problem's going to get, because the market just keeps pushing rates higher on Greece, which makes it even more unsustainable to go ahead and try and refinance. Okay, you got guys buying credit default swaps left and right, so they're actually hoping for a Greece default because that's going to be a huge payday. So a little bit, I don't want to say competing interests there, but there's a lot of different things going on. Now we're going to get the GDP numbers in Europe on Friday, which we could be back in the 142 level area by that time. So we'll have to keep an eye on that to see what happens. Now a little bit later this morning, we're going to get U.S. trade balance figures. All right, we're expecting to see that deficit. 47 billion is what's expected. I don't see how this is going to get any better, although with the weak dollar, it's quite possible that it will. Problem, of course, is that we don't export anything tangible, so it's I don't see how that thing is going to adjust at all. But so that's what we're looking at for the rest of the morning. All right, and then lastly, dollar versus yen. You can see dollar strengthened a little bit there. So I wouldn't classify this morning as either risk taking or risk aversion. Sort of one of these fundamental days. We've got pound higher because of the inflation report. We've got euro lower because of the Greek deal. We've got the Aussie a little bit higher, okay, based on China. Well, we got the Kiwi a little bit lower based on their home sales. So a little bit of a mixed bag happening here. Fundamentals are starting to shake out a bit, and with the U.S. trade balance figures coming out, while it's going to be an important number, I don't know that it's going to necessarily move the market terribly. I'm not certain what people are expecting. So anyway, that's what I've got for today, folks. Good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.